Okay, people, today we're going to talk about how the NEOS ETFs are taxed. We're going to look at these tax structures because I've been getting a lot of questions on how NEOS ETFs are taxed, primarily how QQQI is taxed, how BTCI is taxed. So we're going to walk through how they are taxed, and they do adjust their tax structure a little bit over time, but generally speaking, this is how they rock. All right, guys. So first off, we're here at the QQQI NEOS website, and we're gonna look at one key classification as it relates to their tax structure. Okay, so what they're saying is that as of the most recent distribution by the fund, 100% of the distribution was estimated to be what's called return of capital. So what does that mean? What is return of capital? Is that, you're giving back your funds? Is that giving you back your money? Well, no. Actually, what the return of capital is just a tax classification. And the return of capital is, in fact, based of options, premiums, dividends, capital gains, and interest payments. So effectively, the dividend payouts. But they're classified as return of capital for a tax efficient purpose, a tax efficient purpose. So I built a little spreadsheet to walk us through, what this looks like. And in this example, I've assumed 98% return of capital with each distribution and 2% what is called Section 1256, which is a tax classification, another tax classification, which allows us to receive a distribution, but that is taxed 60/40 long-term to short-term. Okay. Now, again, with the last distribution, it was 100% return of capital, but I'm just giving you an example where it's both 2% Section 1256 and 98% return of capital. So what has happened? So we invested in QQQI. We purchased 1,000 shares at a share price of $52.78. And the market value for this is 52,000. This is purely an example. Okay, so we had our first distribution. We had our first distribution on June 20th, 2025. The distribution payout based on that market value was $620. Okay, and because 98% was return of capital, the return of capital was $607, and the section 1256 was $12. Okay. So what happens with return of capital? Well, what happens is you don't get taxed on this funds immediately. You do not get taxed on this distribution. What happens is it will reduce your cost basis. So if the market value at the time of receiving this distribution was 52,780, well, after that return of capital, your new cost basis for your asset will be 52,000 effectively. This will reduce your cost basis. So you're not going to get taxed immediately when you receive this fund. What's going to happen is you will get taxed at the end when you actually sell. All right. And so you will continue to reduce your cost basis with return of capital on every payout. So you can see in July, we received a payout, and that again reduced your cost basis. And in August, you received a payout. And again, that reduced your cost basis almost down to under 51,000. Okay. So if you had 50,000, around 50,000 or 52,000 as your initial market value, based on like the 14% yield that you see with QQQI, it would likely take you around 7 years to fully exhaust the cost basis and bring the cost basis down to zero. And what happens when you sell? If you sold when you reduce your cost basis to zero, well, then you'd have to pay long-term capital gains against that 52,000. But what happens now after? What happens after you achieve a $0 cost basis? Well, then the payouts, the distributions now become long-term tax. The payouts become long-term tax. So in this case here, on this example, after your cost basis is zero, it's June 2020. I should probably put this at like 2035. So that's when cost basis, the 20, whatever, let's just say 2031, you got a $620 payout, you're going to get the long-term capital gains of 15%, so $93 tax on that. I'm assuming that you're in a lower income than 500K, you get the 15% long-term tax percentage. By no means am I a accountant, so treat this with a grain of salt, and certainly defer you to your accountant should you want more insights. And also, what I'm going to do, guys, is post that Excel sheet onto my Patreon. And with the Patreon, there's a membership. So for all paid members, you'll get access to all these calculators, including this one I just shared, the tax calculator. And also, you'll get monthly financial coaching with me, one-on-one coaching. We'll walk through your portfolio. We'll look at your income goals. Effectively, you get to hang out with me for 30 minutes to potentially an hour each month, just for 15 bucks. I believe this is a steal, based on my expertise and based on the time I'm going to dedicate to each of you that have joined in, plus all the access to all the great tools. So I think it's a great opportunity to join this great community, and I really want to keep building it. Okay, guys, what do you think? Was this helpful? Do you have a better understanding of the tax structure for QQQI? Let me know in the comments below. Also, please join the Patreon if you'd like. Outside of that, guys, all the best and peace.